let's take a look at the market today for January 21st, 2025. Now, we have the first trading day of the new Trump administration as we had the inauguration yesterday. And so far, the market has been relatively happy. The tariffs, which the market is so worried about, have largely spared China, focused more on Canada and Mexico, and potentially renegotiating the USMCA. And what's interesting is that was done under the first Trump administration. And so, talking about blanket 25% tariffs on February 1st. And, I think that's something that the market is a bit worried about. But once again, kind of sparing the rest of the world for now and talking about, how tariffs will come in stages and this will be more of a process. And they've kind of started laying out starting studies in order to try to figure out which tariffs make sense or not, because they really do need to justify the tariffs when they implement them. Now, when it comes to the market as a whole, it was broadly a positive day, but really more positive for the mid and small caps. You had names like Apple and Tesla down, Amazon roughly flat. And so the broader market was, the equity weight index actually outperformed once again. You had names like Charles Schwab that were up, same with 3M, JetBlue, etc. Apple, like I said, was the notable underperformer. Overall, you also had drugstores like Walgreens, Boots Alliance, they struggled, as well as the PNC insurers. Those were down just a bit, underperformed. Continued worries of what's happening with the wildfires out here in California, in LA County. And so that's something that's still, the market's still a bit worried about. Treasuries were roughly flat. Dollar was little changed overall, but did weaken throughout the day. Gold finished up 0.4% on the day. Bitcoin futures were up 1.2% after some early weakness, so a bit of move there. Crude was down 2%. That was really the biggest weakness in the market was out of the energy space, but did close well off the lowest levels on the session. So there's continued ongoing optimism about the Trump administration. That the worst of what he could implement is likely to be pushed off and more well thought out than kind of a blanket kind of a tariff situation. You still have the debt ceiling fight that is in front of us, as well as the potential DOGE kind of cut spending going forward. That would be something that the market would be a bit worried about if those cuts were too dramatic in the short term. And then we continue to believe first half of this year, broadly, liquidity is strong, but you have a refinancing cycle that really kicks off in the second quarter and strongly in the third quarter. And that could mean a rougher market in the back half of the year than what you're likely to see in the first half of this year. So, the credit markets are largely fine. The small and mid caps are starting to outperform. That's generally a good sign for markets, at least in the near term. And the optimism around the new Trump administration remains there and should hold up the markets with that positive liquidity environment, at least for the near term. So that was the market for today, January 21st, 2025.